I'm Ashton Addison from Blockwest Capital for Investment Pitch Media, and today on the Crypto Coin Show we have Akash Mahendra, Director at the Haven1 Foundation. Akash, welcome to the show, and thanks for taking the time.
Hey Ashton, thanks for having me.
You're very welcome. Excited to dive into Haven1's protocol and a little bit about what the team is working on in DeFi and your insights into the DeFi industry and where it's going. I'd love to start off our conversation by just hearing a little bit about what is Haven1 and what have you and your team built so far, and then we'll dive into all the details.
Sure. So essentially, Haven1 is an EVM-compatible Layer 1 blockchain with the goal to provide secure, accessible, compliant, user-friendly on-chain finance to not only retail users, but also for developers and institutional investors. Mm-hmm. So, despite its evolution over the number of years, DeFi still remains a very convoluted and, turbulent landscape, which is rather unfortunate given all the strides that we've made so far. Mm-hmm. Every single day, DeFi users face daily vulnerabilities such as, hacks, exploits, liquidity risks, rugs, and furthermore, there's even more regulatory uncertainty, which has been added on from America, parts of Europe, and certain parts of Asia as well. So overall, this has caused pretty lack of widespread faith in blockchain technology, and this is stunted progress, and hasn't really provided the consistent adoption that we all hope for. So what we want to do is essentially expand the current financial ecosystem, drive more retail and institutional adoption of Web3 through our enhanced security frameworks and network level guardrails, and really just trying to enable on-chain finance for every single person.
Mm-hmm. That's great. Blockchain can have a lot of use cases, but I think DeFi in today's day is one of the most important ones because, it's already it's at the heart of reinventing the financial system, and it really is clear cut on how it provides more value inside of the current blockchain ecosystem that we have right now. With Haven1 being focused on improving on-chain finance, how so specifically do you think Haven1 can improve DeFi?
So previously I mentioned that we're aiming for a more safe and secure, on-chain finance platform. The two things I really want to talk about is network level guardrails, as well as our provable entity framework. So first and foremost, one of the security is baked into the protocol itself. The network level guardrails that we are creating exist to protect, not restrict, the financial opportunity of using the network. One of these network controls, for example, is that we have on-chain controlled deployment of contracts. Any contract that needs to be deployed requires whitelisting and approval by the validators, and it'll have to pass through a governance process. Our plan is that every protocol and contract, will have to pass an extensive risk model that we developed, and each deployment will need to fulfill certain criteria that meets industry standards, as well as certain levels of audits, and that automatically prevents significant number of the hacks and exploits that happen in DeFi today. Mm-hmm. I think for us that's really important that we kind of promote this security for retail and institutional users, mm-hmm. especially those who haven't really dived in DeFi or on-chain finance before, because we need to be welcoming. We need to understand that the average user, even in today's standards, doesn't understand the risks, isn't able to read solidity contracts. So really we need to kind of take on the responsibility of securing the network itself, and creating some industry standards which protocols can adhere to, rather than just continuing with this Wild West that's been happening for the past few years in DeFi. Mm-hmm. And I should note, Ashton, that I think there's something around over $8 billion, which has been lost in the past couple of years in DeFi and in Web3 in general, just based on chain analysis data. So and it's a pretty worrying trend because this number keeps increasing year on year. I don't see how we can possibly have widespread user adoption, institutions coming in until we somehow fix this issue from getting worse and worse. Yeah, so that's essentially how our network level guardrails come in play. There's a lot more to it, but I don't want to get into it, all of it right now, because that might take hours. Yeah.
Yeah. With the institutional adoption that you're talking about, obviously you mentioned, there's still a lot of hacks, but we've seen that it seems to have gotten better since sort of the DeFi explosion in 2020, in that there is more adoption. What do you think is the current stance on institutions? And they're looking at DeFi, but they're not ready to dip their toes in, or is there sort of getting to that early adopter phase where there are a lot of them starting with it, just taking it very slowly? Where do you think that they're at with experimenting with this technology?
There's definitely a lot of interest, and during my time at the the Yield App DeFi team, we had a lot of these discussions with institutions such as JP Morgan, BlackRock, Goldman Sachs as they explored the blockchain ecosystems. Now, all of them expressed interest in deploying on-chain, but first of all, they had risks, they had concerns with the risk they would have to take in the liquidity risk, or risk of exploits on-chain, as well as the counterparty risk. I think from memory, I did see a startling figure a couple of weeks ago that TVL off DeFi protocol is nearly an all-time low within 3 years. So that's pretty shocking to me, given all the advancements we've made in the past 3 years. Whilst assets on chain, such as stable coins and other instruments, are increasing. There's tokenized gold, there's tokenized silver, there's all these other tokenized stocks coming in as well. Different types of equities, stable coins, US dollar stable coins, euro stable coins. They're all coming into the market, but the DeFi protocols aren't really getting any use. And as compared to a year or two ago, or even 3 years ago. So it is a bit shocking to me that I didn't see that figure. Personally, I've stopped deploying as much capital as I did with my own funds in DeFi because there's just too much uncertainty now. Even Curve, which was meant to be, I suppose, a blue chip. It is still a blue chip protocol, but everyone assumed that there was virtually no, it was risk free. Now we found that there was a 0-day exploit within the the Viper compiler. Same with Balancer. It's one of the biggest and most trustworthy protocols. It's had 2 or 3 issues this year. So there is definitely risk from that institutions will need to take on if they do deploy on chain. That's just the reality right now. That's why a lot of them use their own enterprise blockchains, or they're building their own enterprise blockchains, which protects themselves from this risk. But ideally, we need a mixture of public and private blockchains. In terms of we have risk controls on a public blockchain. Now, that's where I think we will need to go as an ecosystem. The entire Web3 space will need to kind of differentiate. There's definitely space for a public blockchain such as Ethereum, or or suppose Solana, or some of the other big ones. But not everyone can deploy on there. Now, there's just too much counterparty risk. And this is where our provable identity framework comes in, which I mentioned a bit earlier. So we require all users and our builders and anyone who sort of wants to deploy capital on chain to complete a identity verification before executing on-chain transactions. So only the result of the identity verification and the country IDs will be stored on chain, whilst all the rest of the data won't be stored by us at all. So essentially what we're trying to do is create some sort of framework which assures that all on-chain actions are compliant and performed by known actors. I think were you aware of the whole Tornado Cash issues that happened, I think, sometime last year?
Yeah, a little bit. It'd be great to enlighten the audience if they weren't.
Sure. So what happened there that is, I think, is OFAC. They raised concerns, or they released some ruling. I'm not really sure how that happened, but they said anyone who used that application or even mixed money with people who use that application were non-compliant and may face regulatory issues. Now, imagine if you're an institution such as JP Morgan and you've got all these standards that you need to hold on to. You can't really just deploy money on Aave because you don't know who you're mixing money with in that pool is. So there's just too much counterparty risk. You need to know that everyone on chain that you interact with is a known party, is compliant with the AML requirements, terrorist financing rules. So I just don't think they can ever deploy to a public blockchain such as Ethereum. And I'm an ETH maxi, and I love transacting on Ethereum. I love having the financial freedom, and I enjoy the financial inclusivity it gives us to interact with people around the world without intermediaries. But the reality is, like, a lot of the bigger players aren't able to do what I'm able to do, because they need to, their actions need to be compliant, and they need to adhere to strict rules wherever they are. So that's something we are kind of trying to solve by having a approval and a framework to essentially access Haven1. The other one of the other benefits of that is that because every person who transacts on chain will have a sort of a proof of ID NFT. Developers can easily restrict or enable users from specific regions to use their apps. So, for example, if you want to do fundraising, Ashton, or if I want to, for example, sell treasury bills on chain, such as companies such as OpenEden do. Now, they need to make sure that they are only interacting with certain people who pass certain levels of verification, and they're able to do so on Haven1 very easily just through a single line of code. So not only can institutions and other retail users be assured that they will be complying with all the regulatory requirements, but so will developers. You won't have the issue where randomly the SEC or OFAC or whoever it is will be trying to fine you or bring you to court for just creating a permissionless app.
Great insights into the industry there, Akash. Thank you. And you mentioned there about the TVL levels and the total value locked compared to 3 years ago, and also about there's more stable coins and there's more tokenized gold and silver and other stocks, which I think is great as well. I'm curious on your insights into sort of that, looking back into when the TVL was very high, when there was a lot of activity in DeFi versus now, and sort of when we look at when it was skyrocketing or when there was a lot of growth and interest in it, how much was speculation versus fundamental value that's sustainable? When I think part of the reason why the total value locked is down is obviously the asset prices are reflected in that Ethereum was almost $5,000 and now it's $1,500. So that's going to reflect as well. But there also was a lot of smaller coins and different projects that were going in there that had high yields, and a lot of people were putting their capital in just because they saw that it looked really attractive, but it wasn't really sustainable. And when it stopped being sustainable, then they took it out or they lost it. Maybe we can talk about sort of that stage of DeFi when there's a lot of interest in what we're seeing now, and what are actually the fundamental parts that are sticking around and will continue to be there for the next cycle of growth.
So you are right. I mean, the previous cycle, I feel 99% of it was fueled by speculation. There's a few major trends that kind of played out, which was certain parts of DeFi did really well in terms of price action. There was the entire layer one trends, the alternate layer ones. Ethereum competitors did super, super well because of the ETH gas fees narrative, as well as the lack of, transactions per second that Ethereum can do. And that was the point when L2s hadn't scaled or deployed, properly as yet. And of course, there was the entire NFT narratives as well. There's a whole bunch of other small narratives, such as, let's say, what was it, decentralized, the networks, the way you kind of, the online networks, like Decentraland and Sandbox and things like that, the virtual worlds, all that sort of stuff. So all of that was driven by speculation, because it doesn't really make sense for a virtual world protocol to be worth $10 billion, like, such as I don't know what levels it got to, but I'm pretty sure they, the bigger ones such as Decentraland and Sandbox would have gotten to 10 billion plus fully diluted values. So, and they barely had any users. Oh, and still don't really have any users right now. So it obviously didn't make any sense. Same with the alternate layer ones. Now, some of the ones which did well was for Solana, there was Phantom, I think Avalanche, Cello, all these alternate Ethereum layer ones which were competing with Ethereum. Now, they didn't generate many fees at all as compared to what even Ethereum does today in the bear market. So there was no reason for them to even be considered competitors at that point, even though they did take TVL of Ethereum for a while. But in reality, the fee generation was very low. They all kind of, I suppose, pumped because they had really good incentive programs, that the flywheel was doing well, and these things always do well in the bull run. But now we are back to reality a bit. So the asset prices have dropped quite significantly. It's hard to find what the fair value of Ethereum is, because it's such a unique asset class, right? Like it's some people think it's a store of value only. There's obviously other aspects of it, because after the merge, it's actually still is a deflationary asset. It generates fees now. Essentially, and you need to hold Ethereum to use it. So it's got many different properties that's kind of hard to value what is fair rate would be, as people do in TradFi. So you can't really use a price earnings ratio. There's other models I've seen people use it, but I don't believe that any of them are super accurate. What is very clear, that moving forward, there's so many useful things that we can do on chain. Like we can, trading on chain, for example, makes everything more transparent. It brings more people in. That's, I think, the biggest and the most exciting part of the blockchain system. So, for example, let's say I'm living in Australia here. So let's say I want to trade tokenized American stocks now. American stocks in general. I can't really do it super easily. I have to apply to different brokers. There might be some restrictions that was placed on me. It is a pretty frustrating experience. Like I've did it a few years ago around the COVID time. But ideally, if a protocol can bring tokenized stocks on chain to either Ethereum or a more of a permissioned, or like more of a sort of secure platform such as Haven1, I can do it with a couple of clicks. Even if I have to verify my identity, I should be able to access that technology and the opportunities as easily as as if I was living over there, or even easier, because I don't need to go to an intermediary. So that's the kind of stuff which really excites me. There's a lot of these examples that we can kind of talk about. Like, for example, another thing would be sports books, even as simple as that, accessing transparent sports book where you're not getting wrecked by the spread and the odds. You can bring that on chain. You can even, for example, if you want to build it on Haven1, you can, know restrict or enable only certain parts of the world. That's kind of useful for certain sports betting companies. Things like that. We're all going to make things a lot easier by bringing on chain. I do believe that the real value in these kind of products and these kind of platforms will come out in the next run. That's what I'm hoping for. But as we all know, and I know you've been through about 5 or 6 cycles. That usually the dumbest things end up on top. So it's I'm not holding my breath, but I'm happy to see that a lot of things that are being built right now actually are more useful than the next ohm fork or whatever you want to do, which doesn't have any value. It's just a bit of a fad.
Yeah, no, those are great insights, Akash, and especially with the tokenized stocks and moving that kind of finance onto the blockchain. There's obvious benefits once it's done in the proper framework, and I think it sounds like the framework that Haven1 is building, it's for onboarding into DeFi. It sounds proper, so I'm looking forward to seeing how it all plays out. Maybe you can just talk about the current stance of the network, where you and your team are at with it.
Yeah, so it's been about just over a year since we started architecting and building Haven1. We deployed the private testnet early this year. With that initial deployment, we designed how all the network permissions and parameters would work, the role the validators would play, and the best way to implement the approval editing framework at a network level. Since then, we've of course been scaling up our team, onboarding a significant amount of partners and developers, and we're at a stage where we have a public testnet, internal public testnet that we are still stress testing and working out all the kinks. We are hopeful that we can release the public incentivized testnet, which is a significant milestone for us, in the next month or so. No promises there, because with nascent technology, you never know how things are going to go. It's one of those things where this hasn't been done before. So just for some of your viewers, Haven1 is designed using GoQuorum, which is an open source blockchain platform. Built by, I think it was JP Morgan, and it's currently being managed by Consensus. And we're working closely with the Consensus team every week to upgrade and improve the client. And only through GoQuorum are we able to create a blockchain that provides flexible and expressive network permission management. This can't be done on any other L2. This can't be done on Ethereum. So it is something unique that we are building. And with this kind of technology that hasn't been deployed before, we do anticipate some issues to come up in testnet, which is all part of the game. We'll work through those when they do come along. So this is a very exciting time for us. Ideally, once we get the public testnet out, we'll be working super hard to onboard developers. There'll be the grants program. We do plan to run our own hackathon before the end of the year. There's a lot of initiatives that will be in place to assist everyone with onboarding as well as use.
Wow, very exciting. And it sounds like it's just around the corner. But of course, you're right. It's hard to put final dates on these things, because with testnets, there's people that are trying to break them, which is a good thing, because you want to get the kinks out before you take the plane and put it in the air. You better work on it beforehand. So I'm definitely going to be watching for the launch of that incentivized testnet. And when that happens, will there also be an opportunity for people that are non-developers or sort of DeFi enthusiasts to be able to check it out and sort of explore through it?
Definitely. So, once we do launch the fully public testnet, there'll be campaigns that people can, Xeely and other Galaxy campaigns that people can use. We'll have our own internal program that incentivizes use of the testnet itself. It's a pretty interesting time for us, because we need to kind of create the entire flow, which is exciting and unique for our users. So a lot of work's being done on the user experience side. One thing I think that I want to note is when a new blockchain testnet or or even a new blockchain mainnet launches, I'm always keen to jump on it because there's always opportunities, especially when mainnet launches. Now, it is a super confusing process for the average user. Like even I find it very confusing. Like suppose how base launched maybe about 3 or 4 weeks ago, right? I was like, which dexes are available? Is there a lending market? There's just really poor user experience, and this is from Coinbase, who's probably the biggest company apart from Binance in the Web3 space. So we want to create a very smooth and like interactive and easy user experience, which aimed at onboarding not only the current users but also people who have never used on-chain finance before. So yeah, it's one of those things where we are working very, very closely with a number of designers to have that easy flow. If I struggle with I've been using DeFi since its beginning. When I think what was the first thing when all those Uniswap clones and fob farms and SushiSwap came in. So if I struggle with finding out information about a new blockchain, I can't imagine how the newer users would feel, and they'd probably fall for a lot of scams and new dexes which rug. So yeah, that's the kind of experience we want to avoid.
Definitely. And to follow into the launch for the incentivized testnet, what is the best way for the viewers to follow along in the communities or on the site?
Yeah, so if anyone wants to learn more, you can find us on Twitter, which is at Haven1 Official, or directly through our website, haven1.org. There's all the links to our socials, such as Discord and Telegram there. We're super active. The team is super active on there, answering any queries or questions. Yeah, definitely come and join the community. There's plenty of things to do even before the testnet launches. So we're very glad to have you on there and happy to build and work with anyone who's keen to join us.
Awesome. Thank you so much for your insights into DeFi, Akash, and for what you and your team are building at Haven1. I appreciate it. Looking forward to the incentivized testnet launch in the near future here. And let's definitely follow up for the next stages of the protocol.
Thanks, Ashton. Lovely to talk to you today.